No one likes to pay taxes, but is it possible to have a tax-free retirement? And the honest answer is maybe. For many people, though, truly having a tax-free retirement actually means you're leaving some things on the table. Throughout most of your career, whether you saved into a savings plan, a 401k, a 403b, the TSP account, all of those accounts are what we would call an IOU to the IRS, meaning you didn't pay any taxes when you put the money in. It grew for many years, maybe decades, before you take it out. So it grew tax deferred, but ultimately when you take that money out, you have to pay taxes on every penny of it, or at least every penny of it goes through your tax return. And so many of us were under this myth or this notion. We were told through most of our early career, well, put as much as you can into those tax deferred accounts because taxes are supposed to be lower when you retire. However, right now we're sitting at virtually 40 and 50-year lows when it comes to tax rates. So the current tax law we're under today will actually be going up, which is why we'd say that notion of taxes being lower in retirement for many people is a myth. And in fact, they'll be going up or getting worse. So when we talk about having a tax strategy or incorporating tax diversification as a part of your comprehensive or your holistic retirement plan, let me explain what that means. Different types of investments, different types of accounts are taxed differently. In keeping it simple, as we mentioned, those retirement accounts are all taxed as ordinary income. Roth IRAs, for example, are tax-free. Certain types of life insurance can also be tax-free. And non-retirement accounts, you simply pay taxes on dividends or capital gains along the way. And tax diversification is a strategy to say, can you have all of the above? So that when it comes to retirement, if you're trying to meet a certain goal of whether you need $75,000, $100,000, $120,000, whatever amount you may need in retirement, can you have various resources to be able to have the income you want, enjoy retirement, but do so in the most tax-efficient manner possible? Unfortunately, at Outlook Wealth Advisors, in decades of helping clients do this, we've never seen that type of planning happen by accident. It takes a dedicated effort when it comes to managing and reducing taxes over time. We often refer to this as the 4 seasons of taxation. And what that means is that for most people, there's 4 distinct time periods when it comes to retirement that also impact your taxes. For many people, that first season, that may be the peak of your career, those last few years before you go into retirement. And for a lot of people, your income and therefore taxes may be as high as they've ever been in your life. But then you retire. And many people in retirement says, you're allowed to control what your income, because it's not simply what your income looked like when you were working. The bigger question is, well, how much of it are you spending? So for many people, that second season of taxes in retirement says, yes, your taxes may actually go down for a little while. But then the third season of taxation comes, and that often involves maximizing your Social Security, so income is higher, and ultimately required distributions. When the IRS and the government makes you begin taking money out of all those different retirement accounts, whether you want to take that much or not, you have to. So for many people, income and therefore taxes begin going back up. And that last season of taxes in retirement, that's the one nobody likes to think about. But if you're married today, at some point, you or a spouse is going to end up having to pay as a single taxpayer again. And when that happens, taxes don't go up 10 or 15%. Often they just about double. So if you were to sum up tax planning and taxes in retirement, you could simply look and say, if you looked at those 4 seasons and mapped that out against your age today, your plans for retirement, and also began to map that out against changes in the tax law, some we know are coming already, look at that together, and if you have to pay the taxes, when is the cheapest time to pay them? And that's ultimately what tax strategy in retirement is about. Unfortunately, though, you can't simply address taxes without looking at the whole picture. At Outlook Wealth Advisors, we call that the Outlook 360, which is looking not just at taxes, but also where's that income in retirement going to come from? What are the investments doing? Do you have a plan that addresses the health, the Medicare side, as well as the estate side? Because each of those areas impacts one another. You can't have income without at least addressing the taxes. What happens on your income and taxes affects what you pay for Medicare and Social Security. So while as much as people may like to try to put taxes in a box or try to put investments in a box, The whole purpose of the Outlook 360 process is that you need to address all of those together in a comprehensive and thought out manner.